So let's look at the expenses account, still in single entry and incomplete records. So the expenses accounts are used to determine the value of expenses that are to be charged in the income statement or that are to be recorded in the income statement. So we only prepare the expenses account when they've given you more than one figure for one expense. They give you the opening balance for wages, then they give you the wages that were spent during the year, then they also give you the closing balance for wages. Then there you know that you're supposed to prepare the expenses account for that expense. But if they only give you one figure, maybe the wages that were spent during the year, you do not need to prepare the expenses account, because that you just get that figure and record it in the income statement. Yeah. So when you have more than one figure for an expense, you prepare the expenses account. So let's have an example. Wages account. Just an illustration, not an example. Let's say they gave us the opening balance for wages. They were like on 1st Jan. The wages were 2M that were prepaid. They were prepaid. Then the wages that were incurred during the year. Were for 4M. Then wages that were prepaid at the end of the year, 31st December, were maybe 1M. So if it is more than one figure, if it was only 4M, you just get this 4M and put it in the income statement. But then we have 3 of them, meaning we prepare the wages account to get the figure that we are going to put in the income statement. So let's first simplify this. When it comes to expenses accounts, these things will help you to understand them very well. So in case the expenses are prepaid, and then we also have the accrued ones that are not paid. So prepaid and then accrued. The opening balances. Then we have the closing balances. Closing balances. In case the opening balance of an expense is prepaid, you debit it. In case the closing balance is prepaid, you credit it. Then in case the opening balance of an expense is accrued, you do the opposite, credit. In case the closing balance is accrued, you debit. That's how it is. Then all payments that are made during the year are debited. You debit all the payments that are made during the year. So that is the simple formula that can help us when it comes to expenses account. In case they tell you wages were prepaid, the opening balance was prepaid. When you're preparing the wages account, you debit that figure. In case the closing balance was maybe accrued, you still debit that. Yeah, then all payments that were made during the year are debited. So this illustration that I put here, these wages were prepaid. Even the closing balance was prepaid. So we said prepaid opening balance, you debit. So balance brought down. This, it is 2M. So 2M. Then during the year they paid wages of 4M. So all payments that are made during the year are debited. So maybe they were paid through the bank. It can either be bank or cash. So here you come and write bank 4M, because we said all payments that are made during the year are debited. Then the closing balance is still prepaid. We said prepaid closing balance you credit. So we come here on this side, on the credit side, we write balance carried down, which is 1M. Then we balance off. This plus this, it is 6M. Then this is 1M. This side is greater than this. So this, we put the greater figure on both sides, 6M, then 6M. So 6M minus 1M, what you get is the figure that you put in the income statement under expenses. So it is 5M. That is how we prepare the expenses account. So let's have an example whereby it is accrued. Let's imagine the opening balance is accrued and then even the closing balance is accrued. So when we are preparing the wages account, debit and then credit. So if the opening balance is accrued, we say the opening balance, if it's accrued, we credit. The closing balance, we debit. So balance brought down, we shall put it on the credit side. It will be 2M. Then all payments made during the year are debited. So we write this side bank, which is 4M. Then the closing balance, if it is accrued, we debit it. So we shall write this side balance carried down. It will be 1M. Then we see which side is greater. This is 5M, this is 2M. This is greater. We put a greater figure on both sides. So 5M minus 2M, what you get is what we shall put in the income statement. So it will be 2M. Sorry, 3M. 5 minus 2, it is 3M. Like that. So that is how we prepare the expenses account when it comes to single entry and incomplete records. Thanks for watching. Do not forget to subscribe, like, comment, share with your friends. Let's catch up in my next video. We are going to be having a full example on single entry and incomplete records.